Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, March 31st, 5:02 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what's important to know for next week, and update the world famous 21 over 21 leaders list as March and the first quarter come to a close. Good to be able to give an upbeat take on the market. So, state of the market uptrend certainly solidified today, following up from the strength on Wednesday and Thursday of this week. We're still excluding financials and real estate from being in an uptrend, as those charts are still very broken. But check over here at the trend gauge. We've got leadership, bullish slash uptrend. We upgraded this on Wednesday. Also on Wednesday, we upgraded our short-term trend to from bearish to neutral. Uh, and really, if you want to exclude financials and real estate, we would be in bullish slash uptrend. Just look at what the S&P and the Nasdaq 100 are doing. But rules are rules. This is based on 5 indexes, and two of them still looking pretty questionable across the short term and the medium term and the long term moving averages. Dow caught a little bit of fire this week and came back showing some strength. Mid caps improving also. Small caps still being dragged down by the financials and real estate, but not to as big an extent. In fact, we went long with the home builders today, which is a standout portion of real estate. There simply aren't enough homes available for the people that want them, and the home builders are building them as fast as they can because of the shortage of uh, existing homes on the market, and in spite of the fact that interest rates are uh, quite a bit higher than they were about a year ago. So let's dive into what just happened. PCE data, a key inflation metric that the Fed keeps an eye on, came out before the market, and it was below expectations, meaning inflation not as bad as was expected, and that sparked a gap up, not a very strong gap up, but right after the open, we really took off to the upside. So it was a minor gap and go with an additional follow through day by the end of the day, as the S&P and the Nasdaq were up strong on higher volume than yesterday. Here are the final numbers. Our Revere Growth 7 Growth ETF composite up 2.2%, S&P 500 up 1.4%, Nasdaq 100 up 1.7, Dow up 1.3, mid caps up 1.8, Russell 2000 up 1.9. No fear to be found in the banking sector today. Global diversified 60/40 up 0.75. Foreign stocks lagged quite a bit today versus our indexes. In-house GROTECTION up 1.45%. We'll get through the updated 21 over 21 list and the tail of the tape. Let's dive right into what we do here at Revere. Active management. Why do we do active management? To keep the heck out of the way of these bear markets, which can crush your nest egg. Sequence of returns is a concept that needs to be understood. The market returns 8 to 9% on average every year, but certainly not every year. If you run into That's known as the sequence of returns. If you run into a negative sequence of returns approaching retirement, you can lose half of your nest egg and you just don't have time to make it up. And it can really impact your lifestyle as you go into retirement. That's why our number one job is risk management here at Revere. We've seen too many people get crushed by either the uh, willful ignorance or unconscious incompetence of asset managers, financial advisors that just take no action to protect their client portfolios when the market is risky. We're technicians. We recognize the difference between a healthy market and a risky market. We talk about those rules every night here. We're an open book at Revere, talk about our positions, our portfolio changes, what we're looking at in the market. Stick with us to stay on the right side of the market. And if you're interested in this approach, reach out to us. My email is don@revereasset.com. My partner, Dan Stewart, dan@revereasset.com, or you can phone 855 Real Wealth. That's 855 732 5932. So, uh, stayed out of trouble during 2022 for the most part. But when you get back above short term moving averages and medium term moving averages and the long term moving average, you got to be in the market. You got to participate. You got to start growing the capital that you protected. And what a change over the last 3 weeks in the market. So we had obviously the quote unquote banking crisis, liquidity crisis 3 weeks ago. The last shakeout of that took place last Friday. You'll see that when we bring up the mid and small cap charts. And this week, very positive week for the markets. We had an O'Neill follow through day on Wednesday. We had today a subsequent follow through day. Growth stocks lagged on Wednesday, but really kicked into gear today. It's what you want to see. I'm looking at my screen. I'm seeing multiple up 4, up 5, up 6, up 7, even an up 22%. And that stock's going to be added to the 21 over 21 list. So we'll talk about that momentarily. But this is the market saying, for the time being, we're not concerned enough about inflation, the banking crisis, the recession. We're going higher. We're looking at the possibility of interest rates stop being raised, possibly cut at the end of the year. That's what the Fed fund futures say, despite the fact of what the Fed is saying. But anyway, for now, 3 positive days back to back in the market wouldn't would certainly not be surprised to see some sideways action or a pullback. But under the way we do things and above all the key moving averages, those pullbacks should be used to add to the leading stocks. So there's your S&P 500. Here's the NASDAQ 100 breakout this week, following through today on it. You can see the big candle up 1.7%. It's been the strongest index since January, for really all of January after lagging badly the last quarter of last year. But there's no arguing with what's going on now. Let's flip to the Dow, which had a decent comeback now. 3 closes above the 21, 1 close above the 50-day. Great stuff there for the Dow. A very positive week. Uh, Not from a relative strength standpoint. You can see the little bit of the lag, but the price action certainly improving for the Dow. Let's flip to mid caps now. Second close above the 21-day moving average, still below the 50. 3 closes above the 200-day, certainly improving. And here you can see last Friday, we've been talking about it, this shakeout, uh, false breakdown on Friday below the prior 2 weeks lows in the index, closing at the top, putting in a hammer, and that set the stage for 5 positive closes on mid caps this week. Flip to small caps. Um, Yeah, that's waste management. IWM, not WM. Flip to small caps. Here's the false breakdown too. Back-to-back days. Happened on Thursday, happened on Friday. And that set the stage for 3 out of 5 days. But on the week, small caps up 3.85% on the day, despite the fact that there was a little bit of banking issue yesterday. And look at the small caps. First close above the 21-day moving average. Overhead, we've got the 50-day and the 200-day, but this is certainly an improvement, and it's at the top of this 3-week range that we have been going through since the 3.9 and 3.10 breakdown on the banking crisis, the liquidity crisis. So trying to put up a fight very clearly. Let's flip now to the dollar. Dollar was up today. Stocks didn't care. Remember the days when stock market absolutely was moving in inverse correlation to the dollar? This is still in effect for precious metals, but it's not in effect, hasn't been in effect for the market as they've been paying attention to more important things. Tight range over the last 2 weeks for the dollar. Not a lot of volatility under the 50 and the declining 21-day moving average, and it's oversold. It's possible that this comes off of oversold, and if the market participants start looking at a stronger dollar again, that may act as a headwind, but for now, it's not. We don't worry about things that might happen. We deal with what's actually happening. The VIX, that's what's actually happening. Five lower closes this week under 19. It's in this range where it doesn't go a whole lot lower, and that could be a headwind for stocks. But again, expecting a bounce and clearing the decks before the bounce happened. If you did that yesterday, you would have missed a very nice day today. So for now, the VIX is working in our favor. Let's flip to bonds. Let's look at junk bonds, JNK. They're up today, breaking above some key moving averages. In fact, all of them. This looks a lot like the indexes with the 3 positive days. Positivity in stocks means not as big a concern about bonds, junk bonds of non-investment grade companies. Let's look at LQD, also up. Again, gaining the confidence. This means that price up means rates are falling. The broad index BND also up today, making highs for the week. And TLT up strong 1.5%. Again, this means rates are falling if price is going higher. Let's now do gold and gold stocks. We'll start off with silver. Silver was positive in the face of a higher dollar today, running into this big resistance area here between 22 and 22.50. Gold stocks, GDX, down 0.5% after a nice move this week, just taking a break. And gold itself, GLD, weak today with the stronger dollar. It made its highs last Friday. It's very similar to how we shook out on the banks. This is looking more like the fear trade isn't as important. In fact, look at the relative strength line in this. This was the place to go when people were concerned about the banks, not so much if we're not as concerned about the banks. And let's finally, Bitcoin up 1.7%, saying risk on, trading in this tight range. Look for a breakout above this 2-week range to signal risk on. And again, that's confidence in the market. So those are the major indexes that we track every video. Let's go to the tail of the tape. You can pause this and read through the whole thing. I'll hit the highlights. One thing I do want to point out is we absolutely had sentiment in our favor the last 3 weeks. 3 weeks in a row. This is the highest, 22 and a half, which is way below. We talked about this on our podcast, which is already out on YouTube. Way below the historical average for bulls. And the bear number way above the historical average. This is a contrary indicator when sentiment is bad. That's frequently when bottoms are put in. And that's what we're seeing as of right now, as of last Friday with that last shakeout. Fear and greed neutral at a 49, well up. It was at extreme greed or extreme fear below 25 earlier this week. We're operating under the bull case. There's the inflation data below expectations. And this was the bank that everybody was worried about yesterday, MCB. Guess those fears subsided. It was up 34% today. Day count up 5 out of the last 6 days now on the S&P above the 8 and the 21 EMA. 50-50 chance on the May 3rd FOMC for either no cut or a 25-point basis cut. Raise, I'm sorry, 25 basis point raise. There's a 50% chance of that. Positive expectations with the follow-through day and the fact that we're above the 21 were confirmed. Strong up through resistance on the S&P and on the NASDAQ 100. Here's the intraday trading. We trended up, we based, we broke out again at 3 o'clock. A little bit of a pullback and squeezed into the close. Let's go to the S&P and the 5-minute chart, and you can see very clearly what I'm seeing. There's your gap up. Look at this, just nothing but buying. From 40.55-ish near the open all the way up to 40.91. Little bit of a base, couple hour base, broke out at 3 o'clock. Here's the people taking profits into the weekend, and then the squeeze into the close, closing at the high of the day and the high of the week. Good stuff there. 11 out of 11 sectors up today. Uh, Cloud and software really had a great day today. Let's look at CLOU. This is cloud software, up 3.56%, very clearly moving above the key moving averages, still putting in a cup and handle, so still has room to run. Solars were strong today. Semiconductors, China putting Micron under some scrutiny for security issues. That kind of trickled down to the whole semiconductor sector. Started weak, still ended up, but by the end of the day, up 0.6%, but lagging the overall index and the NASDAQ big time. On the downside, emerging markets, KWEB, gold and gold stocks, and bond yields. So we in the portfolio, we added two ETFs today. There are 3 times ETFs. We bought Nail, which is the home builders, and ARK, which is a strong outperformer and a strong uptrend, and it gets you a broad variety of stocks. Took our adjusted beta from 1.33 up to 1.5. Let's take a quick look at Nail, NAIL. Clear break above. We're using the underlying, which is ITB, as our signal, and you can see the clear breakout on ITB of this 4 or 5 week congestion. And here's ARK. You can see it breaking above the key moving averages in the 40 level. Let's go to a 60-minute chart of this. This has been trading pretty tightly. Uh, Not quite breaking above these levels, but you can see the strong day today and the strong buying. That'll outperform in an uptrend. Bottom line today, PCE inflation below expectations sparked a gap and go and an additional follow through day. Good stuff if you're a bull. If you're a bear, I smell your fur burning. Let's get to the 21 over 21 list now. We're going to start with 3 that are still, we still own them. We still own a little bit of gold. The chart looks great. The relative strength over the last week and a half, not so much. So technically, it's coming out of the 21 over 21 due to relative weakness and making room for some better tickers. But I did want to show it. And ARK, these aren't in the 21-21 list, but we bought them today, and they could be if I didn't have so many other stocks that either didn't want to get kicked out or absolutely insisted on getting added. Same thing with Nail and or ITB. Good stuff there. Now the official 21 over 21. We bought Lulu on the gap up. No progress since that buy. But since we own it and it's a power earnings gap, we want to track it. And since we own it and it's over the 21, we certainly want it in here. This is the stock that just absolutely kicked down the door and said, you got to include me. AI. A lot of volatility in this one, but just a massive day on massive volume, up 21.5%, just breaking out of this volatile flat base where it went up, down, back up. This is screaming that it wants to be a leader, and we might have to crawl our way into this one little by little. ELF. The rest of these were, well, let's talk about what got kicked out. BJ's. BJ's is still in the 21, but it's gone nowhere over the last 2 weeks since its earnings gap up and relative strength lagging. I couldn't in good conscience keep this in the 21 over 21 when I got a stock like AI in there. So besides GLD, BJ's the other one that got punted. The 2 additions were Lulu and AI, and the rest of these are carryovers from last week, which is a testament to how strong leaders have been. ELF, higher highs. Tesla breaking out of this cup and handle, average volume, still has the 200-day overhead. We will be adding if it breaks above the 200-day moving average at a low risk entry point. ON continues to just look fantastic. Tight range week after huge move up on earnings, acting perfectly. Touched and reclaimed the 5 EMA today, still hasn't touched the 8 EMA. CDNS making new highs, bounce off the 21. PagerDuty with a breakout. This has been on here for a few weeks since its earnings gap higher. Nice consolidation since then. Screamed, hey, and this fits with software stocks being strong today, up 6.7%, breaking out of that nice cup and handle. Wingstop, not doing anything. Thought about cutting this, but I'm going to give it another chance. We want to keep some. We want to keep a restaurant in there as we like this list to be diversified across leading sectors, and looks good. Nothing wrong with it. After this nice, strong 6, 7 day up move, just taking a little bit of a break. AMD gap down, finished positive by the end of the day. Looks like it's coiling for a big move higher. Meta continues to just be extremely strong. Again, looking at Meta as an AI play uh, is what they want, and that's what the market seems to be looking at also. GE Healthcare with a breakout on Wednesday. Axon with a breakout today. Shift 4 payments with a breakout over the last 3 days. Lantheus trying to very nice pullback uh, over the last week and a half. Not as impressive a day today, but up 2.3% is better than a sharp stick in the eye, trending nicely above the 80 MA. First Solar, tight action, looks like it wants a bust higher. Palo Alto finally did break out above this consolidation today. Arista Networks, we survived this 3 day pullback and beautiful candle undercut. Look at this, happens all the time. You cannot set a stop just below a recent low because the algos will come and collect them. Look at the 63,000 shares traded in this 5 minute candle here, and look how many stops do you think were just below these recent lows that it collected? I'm telling you, there's a lot of them. That's why our stop was really, we didn't want to break below the low of, I talked about the triangle it was forming, the low of 161. But when you break below it and reclaim it right away, that's why we don't set hard stops. You want to put the action in context. In this situation, we really wouldn't have been worried unless we broke below uh, the 21-day moving average. But that's a classic case of an algo collecting all the stops that were below a recent low and then just blasting off to the upside. So that's the daily on ANET. Next up, ALGM, and these have been on this list for a while, just continuing to trudge higher, sometimes breaking below the 21, but always being back above it by the end of the week. NVIDIA making new highs, ACLS, tight action over the last few weeks, and GE since they updated their sales and guidance and confirmed them, has just really been acting great, riding the ADMA higher. And that's your updated 21 over 21 list for the week ending 3/31. And with that, we're going to wrap things up. As always, would love to hear from you. Don at revereasset.com. Please share our work with friends or family or anybody you think might benefit from it. Subscribe to our YouTube channel so that you get notified when things are added. And remember, it's not how much you make in the market, it's how much of that you can keep. We took care of the keeping. Now we want to start making. And the last 3 days have been a big step in the right direction. We don't know how long this rally will go, how high it will go, how long it will last. For all we know, we could be in the complete opposite situation by the middle of next week. So, uh, we keep raising our stops as they go higher and keep our eye on the market, the inter-asset correlations, and don't argue with what's going on no matter what headlines you read. So with that, I'll wrap up the week ending March 31st. This is Don Vandenbord for Revere Asset Management, telling it like it is, just the facts at Revere. Don't argue with price and volume. Thanks for listening and have a great weekend.